All right, our focus is now South Korea. One of the standout winners today, gaining ground by 2.6%, sitting at below 1,300. We'll take a look at the currency. Much hinges on what happens to the Korean won. The U.S. dollar actually losing a bit of steam against the Korean won, sitting at 1341. You know, just about a month ago, the Korean won was veering toward that 1,500 level, setting off a lot of alarm bells. And take a look at where it is today. The Bank of Korea, as expected, left rates on hold for the second straight month at a record low 2%. And many are expecting the central bank to stay on hold until the end of the first half. The BOK says that there are some indicators that show the downward economic trend may be moderating. Well, let's try to ask that question to Daniel So, regional economist at Forecast. Well, thank you so much for coming in today. So your thoughts? Of course, the BOK left rates on hold as pretty much expected. Do you think this is going to pretty much continue as the economic indicators at least show some signs of stabilizing?
According to market expectation, also in my opinion, the Bank of Korea is going to hold rate at least for the rest. Unless, of course, we see another major sell-off in the world equity market, and they may have to do something to prop up confidence once again in the equity market. By not cutting rate or overshooting on the monetary policy, one of the reasons is because they are very cautious about the confidence in the won, which so far has been stabilizing, and they do not want to inject any volatility.
Right, one of the best performers.
Overly priced because of it has been sentiment driven, and there's a lot of speculative element in the foreign exchange market. That's why it leads to the shortfall in the won. So right now, sentiment has improved, I would say, but it's still fairly weak because there's still lingering export reliance economy.
Absolutely. Yes. And you know, that's actually why we're actually hearing that South Korea's sovereign bonds are getting a lot of traction on the international market. And the yields are really great. What, 400 basis points higher than their peers over in the U.S. if you compare the treasuries. Ultimately, this is to ease the dollar funding needs in the market. And this has been one of the choking factors of the Korean won.
Yes, I would say this. Just they have also secured a lot of reserve line in terms of foreign exchange liquidity with Japan, China, and US. So they are doing all this to show the determination that they are really going to anchor stability in the FX market. Because the won, right now, the won is one of the crucial factor leading to investor confidence, crippling investors' confidence over the last few months, over the early when the Lehman Brothers collapsed. Right. So this is a critical factor, and they are concerned about the economic contraction. But at the same time, they are also concerned about the won stabilizing, because that has actually caused a lot of pain for a lot of the company and also for foreign investor interest in South Korea.
Absolutely, but some economists suggest that by the time the BOK is done with its easing cycle, those interest rates could be as low as 1%. Do you see it going down to that level?
I would say that the most, at most, exchange rate now, and if you look at the interest rate together, it's at record low since they start doing interest rate policy in October 1999, and the monetary condition index in South Korea is the lowest. I've never seen such positive condition in the history of South Korea. It's even more conducive for growth in the Asian financial crisis after when they tried to do a lot of priming to prop up the economy. So right now we won't see the impact in the short term. But
I just sorry for jumping. You know, the interesting thing is because the big bang that swept through the Korean markets in the late 90s, a lot of banks actually are in much better shape. And I think while a lot of the focus has been on the external debt conditions, are you worried at all about household debt? And what about credit card debt? Some people are saying that could be another big worry.
Of course, when the economic spiral downwards, this default ratio is most certain that it's going to go up. But the thing is, can bank absorb the risk and does not shake their financial fundamentals? And that's the most important thing. And what I heard so far is that the Korea effective demand is still there. So when the property price, if you look at mortgage loan, is still going up, that means doesn't mean that they don't have the capacity to spend.
Yes, recorded a trade surplus because of the collapse in imports.
Yes, so they will just pull back on their spending. But you know, when things stabilize down the line, they may spend again. And there's the demand for housing is still there. That's what I heard from policymakers. The demand for housing is still there, and a lot of people are still looking. If the price falls to reasonable level, they will come in and grab. So I would say that the consumer side will remain a slump, but the slump may not worsen further. But the default risk, if you look at delinquency ratio, so the media has always said that it's jumping up. But if you look compared across Asia, South Korea delinquency rate is still one of the lowest.
Okay. Well, you know what? Thank you so much for your thoughts there, and have a broader picture for the South Korean economy this year, especially after BOK held rates steady at a record low 2%.